Hey, it's Delay, and this is episode 221 of the Orange Pill Investor. And today I want to talk about expectations for the market, MicroStrategy, Bitcoin, around the rate cut announcement that may or may not happen. And what makes me a little bit nervous is, and maybe there's a little bit of an echo chamber based on the type of people that I follow and that follow me. But there's a lot of excitement about a rate cut because the assumption seems to be that the Fed cuts rates and then number go up. And it reminded me of something that Punter Jeff said. It was like everyone's front running everyone on everything. And so I think the the current prices are already baked in for a 0.25 rate cut. I think that's just kind of like a foregone conclusion. And I think the last polling or whatever was that there's like a 50% chance for getting a 0.5 cut. So it seems like half the investment world already has a 50% of a 0.5% cut baked in as well. So I don't really make any predictions, but I'm just trying to think about the psychology of these irrational investors that we have to deal with. And so I think that just the 0.25, well, let's just start. If that doesn't happen, if they do nothing, I'm thinking taper tantrum. I'm thinking the market is actually disappointed by that, and we'd see some bad things happening in the market, which, depending on how bad, would probably trigger the Fed to have to come in and be like, "Oh, my bad. You're throwing a tantrum, and we can't have the stock market going down before an election." So then all of a sudden, maybe we would get the quarter or the 50 or more, whatever. But even with just a quarter, there may be enough disappointment in the market that we still see some type of a pullback. And if we get, but see, the market is so irrational. Even if we get a 0.5, half the investment world might be happy, like, oh yeah, number go up, and everybody gets excited. But the other half might be like, holy shit, if the Fed is so worried that they didn't just give us a quarter, like, what do they know? And that could spook the market too. Nothing about the market is rational at all. I think over long periods of time, eventually the price probably becomes what it should. After it hits resistance enough times and after it hits support enough times and just bounces around and figures it out in the middle somewhere. But until that happens, I think in general, it's a pretty rocky ride. And that's why I don't make predictions. But it's also why I sell covered calls, because number go up is not promised. And especially when you are margined and levered to the gills like I am, I have to protect myself against these number go downs too. Like, okay, we made it up to 129 from 118, but then it was back down to 120 again. So, if MicroStrategy were to dump more than $20-$30 a share, I would have to start breaking glass in case of emergency and make some moves. Now, I think it is a little bit of a ticking time bomb, though, because if Bitcoin is going to pump over the next year, there's only just so much time. Like if Bitcoin doubles or triples from here, and it's probably going to happen within that 4-year cycle, then there's only about a year left for that to happen. So some pretty sharp moves do need to happen soon for that to take place. And not financial advice, but I just don't see it as a foregone conclusion that rate cuts are announced and then the market is just in just filled with warm fuzzies and just everything goes to the moon like people are expecting. And the fact that so many people do expect it is what makes me the most nervous about it. So it's Monday. I generally don't place a lot of trades today unless I'm assigned something over the weekend, which I was not. And so, but with MicroStrategy being down slightly from what it went to over the weekend, I suppose I could call this a dip. It was up to like 142. Now it's dropped like what, 5%? Not even, maybe 5%. So I could call this a dip. And so let's just, it's definitely up 20% from when it was down to 115 or 112 or whatever the hell it was. But just for the hell of it, I'm going to see if I can get a fill on a reasonable put credit spread, which is the bullish version. And I covered spreads a little bit recently. And let's just go ahead and try that. So I added the a short put at the 125. And to ensure that this ends up resulting in a credit, I have to purchase one that's cheaper. So that's going to be farther out of the money. So I can pick 124, and that would be risking $100 and getting paid, something here. Or I could widen this out and risk 200 and collect a little bit more premium. Or if I want to go make this a $500 spread, I can spread the legs out by $500, 125, and I could buy the 120. And depending on how much you can collect, sometimes it makes more sense to do 5 $100 spreads versus one $500 spread. Stretching this out changes the break evens a little bit. So I'm not sure how much it matters, but every once in a while, sometimes these whole numbers can have more liquidity. There's more people trading the 125 and the 120s. So sometimes this can be a little bit easier to fill than, trying to find somebody to sell you a 123. But this doesn't look to be really the case. Like bid-ask spread here is $1, which is not good. Bid-ask spread here is 85 cents. Bid-ask spread here, it's like $1.50. So, but it's only $1 here. So it's really not an advantage to going to this whole number. So just for the heck of it, I'll do the 125, 124. This is only risking $100. And really, I'm going to get paid some kind of premium here. So really, my max loss would be the 100 minus whatever I get paid. And just to even see if this is viable, using the Kelly criterion, depending on whether you want to trust Tasty Trade's algorithm and say there's a 57% chance this will be out of the money, or using the delta as an approximation and saying there's a 67% chance that this remains out of the money and profitable. If you're going to use Tasty Trades, then I would need to collect at least $43, which this is pretty much kind of breaking even. And in the Delta version, I would need to collect at least 33. So this is probably not the worst credit spread to try. And you can see that I'm going out to approximately 45 days to expiration. If you want exactly 45 days, which is Tasty Trade's research shows that that's kind of optimal for out of the money options, you'd have to set these up on Tuesdays. But one day isn't going to make much difference. So there's no way in hell this is going to fill at the mid price. The bid-ask spread is crazy as shit. So this is not even, MSTR is not the greatest ticker for spreads. But I'm just so bullish. I'm willing to get screwed a little bit on the bid-ask spread. And the price might be, what else happening to the price here? It might be moving around on me because it wasn't long ago that I was able to get, now it's just cycling between 30, 40, 50. So I'm going to try and get 50. There's no way this is going to fill. And so now I'm going to have to replace it and just try to collect a little less. So let's try to collect 42. Now that's the mid price. It's a chance that could fill, but the liquidity on this is so bad that it won't surprise me. Okay, let me just type it in. Let's go 40. Okay, that filled. And then generally, when I have a spread, I want to collect about 50% of it in 2 to 3 weeks, if possible. So I am going to I'm going to put in my close position now. And Tasty Trade has a nice little handy dandy thing. I'm going to try to close this for 50% profit because that's what they talk about in their videos constantly. So I collected 40. So I want to buy this back for 20 and basically keep half. And let's see, good till close. All right, this should be good. And then this will just sit here. So this will either win or lose. I've also got this CLSK put, I'm sorry, not put, call debit spread that I set up. This was also bullish, but I went out to like 6 months on this bad boy. And similarly, where I'm selling it for 40 and trying to buy it back for 20 on the debit spread, I paid 30 and I want to sell it for 60. So in this case, I want to double my money, and hopefully that will happen within the next 6 months. We'll need CLSK to pump at some point over the next 6 months. And if it follows the price of Bitcoin, I'm relatively confident that will happen. But, nothing in the stock market is promised. So that's just a little quick trade to demonstrate how to set up a put credit spread if one was bullish on a particular stock. The other tool that Tasty Trade's platform provides is IV Rank. I think that's a little bit different than most people's IV implied volatility data. A lot of times they'll provide like implied volatility, like a 30-day implied volatility average or a yearly. And Tasty Trades is more like they track the implied volatility, the daily implied volatility of a stock over the past year. And then this is in the 36th percentile. So the best indicator for when it would be potentially advantageous would be when IV rank was over 50. But anything under 25 is probably like a big red flag. But 36 is just nothing to get too excited about. But it's also not so low that I'm completely scared away from even bothering doing this as an example. All right, so I think that's it for now. Yeah, I do think its number go up over the next year, but I am not hanging my hat on some kind of Godzilla candle on Thursday just because they cut rates by 0.25% or even half, the market is completely irrational and completely unpredictable as far as I know. All right, be good, Joel.